In today's video, I'm going to explain between the two types of support and resistance. One is a retail, one is a smart money. Unfortunately, the majority of support and resistance levels that you will see are retail levels. Retail levels are formed from recent indicative price and story-based analysis, two things that will sink your portfolio. I'll also explain how you have to look at a variety of different charts in order to understand where price is truly going. We'll then apply that knowledge to not only XRP, but also understanding how and why price charts move in alignment with each other. Stay tuned, you're going to find this knowledge incredibly valuable. Support means that buyers will come into the market. Resistance means that sellers will come into the market. You don't want to sell at support and you don't want to buy at resistance. The second type of support and resistance levels are smart money buy and sell levels. These are formed through the CTKS method using Objective Dynamic Market Structure or ODMS, which is called CTKS structure. Smart money buy and sell levels can be seen through your indicator through the monthly service. Smart money, when they look at a particular chart, they mark up all of price action, not just recent price action. Here we see Bitcoin marked up from 2009. Bitcoin is currently 30,251. What we notice here is with the very good news of the XRP Ripple win against the SEC, Bitcoin came up very strongly, as did of course XRP. But what occurred inside the crypto market? Bitcoin controls the fate of the alts. What I've done here is to overlay XRP's price across Bitcoin's price action. You can see directionally how Bitcoin influences XRP's price. A very important rule from inside the masterclass. Rule 45, no alt can escape Bitcoin's gravity. How do we actually interpret this information? By knowing where smart money is buying and selling. We would have seen that Bitcoin was coming up to some levels of resistance around that 31,785. If it doesn't go above, it's going below. If it doesn't go above here, it's going below. What does it mean? We didn't manage to break across that 31,573 level. What did that mean? We were coming down to the 30,993. If we weren't getting above, we were going below. We can see that Bitcoin found support. The smart money buyers came in at 29,943 and supported price. How did this impact XRP? It rose XRP's price. Another very important rule is Rule 446. All markets, and therefore all charts, are intercorrelated and interdependent. As all charts are intercorrelated and interconnected, when you look at Bitcoin, it's giving you the direction of the alts, but it's simply not enough. You need further depth of information. What further depth of information do you actually require? You need to look at total crypto market cap. Let's throw on the smart money buy and sell levels. For example, if our levels were just above this 1.72 trillion, where the market is just at the recording of this video, we would expect price to go down. This is important. If we had a confluence of support below, we would expect price to keep on going. Remember, price is always moving in a wave. When it comes down, it can go up, but when it goes up, it can come down as well. The only way that you can see objective dynamic market structure is through the CTKS method. Let's turn on the monthly service indicator. What do we see here? There are substantial levels of smart money algorithmic support below current total crypto market cap. This is why we're seeing a technical bounce here. We can get follow through on this bounce because we've got a lot of smart money buy levels underneath. Every discipline has its own language. Here we're looking at an EEG. The medical profession uses EEGs to measure electrical activity in the brain. It can help diagnose a number of conditions, including epilepsy, sleep disorders, and brain tumors. If you're not trained to read this EEG output, it simply looks like random lines on a screen. However, if you're a trained medical professional, this output could help save someone's life. If you're a trained medical professional, you've obviously gone through a lot of knowledge acquisition in order to be able to understand this. Medical professionals have a deep knowledge of what the particular lines mean. Underpinning those lines is so much knowledge. The line chart may look very simple, but the interpretation of it is very complex. It's human nature to try to simplify everything to the absolute minimum. People could say something like this: why do you have that EEG? Why don't you just have a traffic light with green or red? In fact, there's complex mathematics that underpins EEG calculations. It's not something simple. People may think it's simple. People may think, oh, I just need one line. It's not like that at all. Professionals need to go deep inside the knowledge to understand what is actually occurring. And as you can see, there's much, much more to it than a lot of people realize. To know where smart money is buying and selling, you need your EEG for the charts. How do you get that? You apply the CTKS method. And popping on the monthly indicator, what do we see? XRP. Now, it's just like looking at an EEG. There's lots of lines all over the place, but they all mean something. What we can see is XRP came up and challenged an area when price was to the left of this particular area that I'm on the chart. You've got to imagine the right area doesn't exist at the moment. What happened was that XRP came up, challenged all this smart money sell area, piled through it, went higher, but there was a lot of smart money sell resistance there. That's what these lines mean. They mean that smart money is hanging out there. These levels are called Stanfield levels or SLs. What happened? There were higher density SLs up further. If it's not going above, it's going below. Where's it going below to? One thing with the crypto market, it's classified by the ICE process. The ICE process is taught inside the CTKS masterclass. Crypto is an exponential asset class, not a linear one. What we see is explosions in price and implosions also in price. We're seeking to understand where the smart money is leaning in to support price and where the smart money is selling. If we get a thing called negative air, that basically means that price is coming down. If we see increasing negative air, that's not good. That creates a higher probability of going down to a confluence of SLs. If we can't make it through there, we're going down further. But note how I showed you Bitcoin's chart and total crypto market cap. Charts never walk their price paths alone. All charts are intercorrelated and interdependent. The CTKS method is an absolute game changer. For the first time, everyday people can understand what the institutions, the algorithms are doing. Without this knowledge, you're looking at a price chart like this. There is no intelligence behind this particular price chart. The one thing to remember, the CTKS method is applied from the inception of price history. In XRP's case, this means those smart money levels were drawn from 2013. The CTKS method can be applied to any price chart. We live in a fast food, fast experience, fast everything society. We've lost the capability of putting in the hard work to learn and understand things. People want very simplistic answers for very complex problems. The truth is, when your money's on the line, you must understand what you are doing. I would urge that you learn the CTKS method for yourself, and you can do so by going to ctksmethod.org. You can then go to the certification section. There you will see Level 1 and Level 2 standard certification. Level 1 gives you the foundation. Level 2 gives you the SLs and SCs. SL is a Stanfield level. It's not a stop loss. You can also learn Level 1 and Level 2 certification inside the CTKS Masterclass. Does the CTKS method apply to stocks? The answer, yes it does. And if you pop on the indicator, you can see that Nvidia came into some fairly steep resistance, couldn't hold that strong smart money sell level. And where was it going? If it's not going above, it's going below. It makes it so simple to understand. That's how price action goes. If it's not above, it's going below. What about here? If it's not above, it's going below. These are like safety nets, and when the price is on the left-hand side, they're like ceilings. Does it apply to commodities? Yes, it does. Here is silver marked up since 1802, and this is part of the CTKS Method monthly service. We can see that silver found safety nets, but it's having trouble getting through this smart money sell level at 24.92. These are the real smart money, the real algorithmic support and resistance levels inside price action. Does it apply to Forex, and can it explain Forex's big drops down? For example, this particular one here, let's zoom in on that. What we saw with the DXY was a fresh air gap. What do fresh air gaps do? They're really bad. A fresh air gap to the downside means that price can fall very, very quickly until it finds safety nets where it can consolidate. The CTKS Method service marks up all of these 27 charts. You should be looking each day at your Tier 1 charts. The Tier 1 charts are literally the engine of financial markets globally. They control everything. They give you a very good idea of risk-on or risk-off behavior. If you're inside the service or you're a new member, please go to 00, go to 4, accessing the indicators, and just fill out that form there. The greatest challenge that you will face as an investor or a trader. Where is smart money buying or selling? Where are the ceilings or the safety nets inside price action? If you know the answers to these questions, you're already ahead of 95% of other people. When it comes to understanding what price is actually doing, with the CTKS method, you can see where smart money is leaning in to support price and where it's leaning out to push price down. The CTKS method will literally give you X-ray vision on the market. And there's nothing better than to learn it yourself and apply it to your own price charts. Marking up your own charts is worth the effort and the energy. After all, you're putting your hard-earned dollars in there. You should at least understand where smart money is buying and selling. What typically happens is people get drawn into the market just as something reaches resistance, and they exit the markets just as something reaches support. The key to remember is there's two types of support and resistance. Retail support and resistance, and smart money or algorithmic support and resistance. The two are incredibly different from each other. 95% of support and resistance levels that you will see are retail levels. They're not smart money levels. Let's have a quick look through the crypto market. We can see global crypto market cap is down a little over 3%. Turning to the greatest gainers past 24 hours, top 100, Synthetics, Injective, LDO, BIT, AVAX, DYDX, Optimism, and Solana. The greatest losers, top 100 past 24 hours, XRP, Stellar, Phantom, Woo, BSV, Maker, Algo, and Litecoin. One thing that's really interesting, if you were investing or trading in XRP without understanding how all the charts intercorrelate and interconnect, you could have very well bought and sold at the wrong times. Market structure matters more than most people realize. Let's have a look at the top 8 cryptos, and what we're trying to understand here is Bitcoin's gravitational pull. You can see Bitcoin coming down. What happened to Ethereum? It came down. BNB, it came down. XRP, it really came down. ADA, it really came down as well. What about Solana? Also came down. What about Doge? It got hit hard. Matic also hit. This is why not understanding the smart money buy and sell levels on Bitcoin is very, very dangerous. The thing to note, those smart money levels change every month. That's why it's called objective dynamic market structure. In the last episode, I talked about 13 cryptos to keep on your radar. Why these 13? It was all about Coinbase. The SEC suffered a humiliating defeat with XRP. If any crypto was as close as humanly possible to a security, it would have been Ripple XRP. But the SEC couldn't prove it. In the SEC legal action against Coinbase, it identified 13 cryptos that the SEC said were securities. We're going to go through those 13 right now. We can see one of them is Filecoin, but Filecoin cannot escape Bitcoin's gravity. That's why we must keep our eye on Bitcoin. If you're finding you're desynchronized inside the market, it's probably because you're not looking at Bitcoin. And then to look at Bitcoin is simply not enough. We must look at total. And if you look at total and don't look at the DXY, that's not enough either. You need to know the smart money levels there. And that's not enough either, because we need to understand the S&P 500, also the US 2 and the US 10-year yields. It's all about getting synchronized in with the market. So we can see that Filecoin, Sand, Axie Infinity, you can see they're all following Bitcoin's gravitational pull, Chiliz, Flow, ICP, NEAR, and VGX, also Nexo and Dash. It's a little bit easier to see it in this particular chart. I'm just calling them Apollo 13, and we can see the noodle here, if you like, just a relative variation of prices of those 13 against, you guessed it, Bitcoin. So far, XRP is the hardest hit, but it was also the greatest gainer as well. Axie Infinity and Chiliz and Sand are all the lowest hit relatively. Always remember, price moves in waves. It's always going up and down. In an uptrend, it goes up, then retraces to find support, then goes up again. Retraces because it's hit smart money resistance and a confluence of SLs, and comes back till there's a confluence of SLs. You will find SLs are the most important thing you can find inside financial markets. And remember, SLs are not got anything to do with stops, they're Stanfield levels. Another thing I suggest you keep your mind on is the EDX institutional exchange. One thing that I pointed out yesterday, XRP may still be liable for securities sales to institutional investors, but these four are escaping that particular problem. And that's why all the biggest names are behind the EDX exchange: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. But one thing that we always know, if Bitcoin comes down, guess what is happening to Ethereum? It's coming down. What would happen to Litecoin? It's coming down. What would happen to Bitcoin Cash? It's coming down. If you're trading and investing in crypto and you're not sure what the SLs are on Bitcoin, that's a bit of a problem because you won't know where smart money is buying or selling. I'll keep you updated each day. But if you want to see the deeper levels, become a foundation member of the CTKS Method monthly service. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.